Thursday, November 6th, 4:28 p.m. New York time. Welcome back, investors, to Winning Wall Street's Money. The U.S. stock market is closed this Thursday. On this Thursday, today, we just recently crossed into the month of November, and the market's been selling off. We're going to look at the two major stock indexes, the S&P 500 and the NASDAQ 100, on the monthly time frame and the weekly time frame. See if we broke out of the range of the prior month and prior week. And then we'll break it down into the 11 sectors in the S&P 500. Looking at the monthly and the weekly, see if we broke out of those ranges. Are you invested in stocks, stock ETFs, single stocks? Or are you invested in mutual funds that are invested in stocks? Are you working that you're earning income? If you are you doing dollar cost average? If you're doing dollar cost average, how often do you do that? Every week? Every month? Every 3 months? Once a year? Are you familiar with dollar cost average? I participate in that. Been doing it for a long time. In indexes, good indexes. So I'm going to explain this. Mutual funds that are invested in stocks, because again, some mutual funds are invested in fixed income products, bonds, muni, corporate. Mutual funds, where many of them are very diversified, you could outperform them. You could save money. Either go directly buying these stocks or the breakdown, which we're going to look at momentarily, the sectors. One of the points here is, if you're invested in garbage, why would you want to stay in garbage? Even if you're invested in a garbage stock ETF or stock. These are two grids. The left is the S&P 500 and the right is the NASDAQ 100. The NASDAQ 100 is part of the S&P 500. The NASDAQ 100 is high-tech companies. The S&P 500 on the left is very diversified. It has 11 sectors. So here, 10-year charts, each one. And we just recently, again, came into the month of November. So looking at both of the current candles, they're both yellow. That simply means we didn't take out the range, the high or low of the prior candle. This happened to be the monthly. The prior month, if you notice, they each made all-time new highs. The current bodies on these yellow candles are solid. That's equivalent to a red candle. Now we're going to go into the 11 sectors to see if any of them are performing better, to identify leadership. If they're performing worse, and if you're in it, why would you want to be holding garbage? Again, I'm showing you good insight, what you could do for dollar cost average, whatever dollar amount you could make a contribution with, if your brokers offer that service. Again, each of these would be monthly candle. There's a stock symbol in the parentheses, very similar to the NASDAQ 100. Again, of course it is, because it's technology. Healthcare. Well, it's also inside candle for the month, but it's underperforming. It's below the highs of last year. Financials. It's also currently inside candle on the monthly. Look at this one, consumer stress rate. It did break out the high of last month, and now it's selling off. It's back inside that range of the last month. Communication services. It already broke the low of last month, which last month was the inside candle. Industrial, also inside candle for the month. And consumer staples, look at this, new low for the year. Loser, not a good investment at this time. Energy, also inside candle currently, way below the highs of prior years. Utilities, inside candle, currently for the month. Real estate, yeah, already broke the low of last month and below the prior highs. No surprise. Basic materials broke the low of last month. So again, these are the 11 sectors. Big difference. Not all of them are performing equal as the major stock indexes. I just showed you the S&P 500 and NASDAQ 100. But again, we still see several of these inside candles. Now let's go to a lower time frame, which would be the weekly. First, we'll look at the two major indexes. Again, the left, S&P 500, the right, the NASDAQ 100, both weekly candles. So the left, the S&P 500, broke the low of last week. That was a dodgy candle. And I mentioned that means what? I mentioned it meant potential reversal. Not to be buying up there. The far right, the NASDAQ 100, huge sell-off also. And tested the gap, broke below it. The trend has reversed. Now let's go look at the individual companies. The sector stocks. Same thing, weekly. Technology, yeah, huge sell-off here. Healthcare, for the week, inside candle. It's holding up here. Again, way below the highs of the prior years. Financials, broke the low of last week. So lower high, lower low. And consumer discretionary. They make a higher high than last week, but didn't make a retest of the all-time high and selling off here. Communication services broke the low of last week. Wow. Also broke the swing low. Wow. Industrial broke the low of last week. This huge consolidation here. Interesting if we're going to have it go lower into this range of wrap buyers there. Consumer staples. Wow. New low for the year. Again, that's consumer staples, XLP, broke the low of last week. Energy. With this gap has not been tested nor filled yet. And for the week, we took out the high of last week and also went below it. Interesting. Again, makes sense people are buying this. These stocks pay high dividends. So people are not expecting growth. They often gravitate to companies that pay dividends so they get some kind of income. Utilities. It broke the low of last week. Real estate broke the low of last week. And basic materials broke the low of last week. Thank you as always, spending just a little time with me. That's it for the video. Thank you for watching.